Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, it's just returning to me again, as I want to talk to you, of course, about some tax and accountancy, that kind of thing. So shortish one today. I'm pleased actually to be sitting here for two reasons. One, to get away from the doom and gloom as we're recording this in November 2025. It's going to be a massive event on the 26th of November when we hear the Chancellor's budget. So as you can imagine, everything we're hearing at the minute is absolute chaos in terms of tax rises that are being sort of rumoured. It's every day in the Financial Times there's an article, so we've got that going on, and then everywhere you turn there's tax rises, VAT cuts to the VAT threshold, all these things being rumoured, and of course we don't know, but history tells us politicians seem to kind of leak this information in advance to sort of test the water. So certainly the sort of rhetoric that we're hearing right now means that it's going to be a busy few weeks. Now what we're doing, just as a side note to that, is if you do like listening to me ramble on about this stuff, I'm actually bringing a few of my team in and we're testing out YouTube Live. So for those of you who don't know, we've got two YouTube channels. There's Heelan Associates, which is our sort of main channel, 50,000 subscribers there. It's been going for some time with loads of how-tos and all sorts of stuff on there. We've got some exciting stuff coming into 2026 there as well. We've also got at the HeelanHub, which is this channel, which you can see me literally on camera doing the same show. If you're listening to this in your ears while you're running or doing the dog, you can also go and watch it on YouTube. Quite cool if you want to interact, because I will go in and reply to the comments in there as well. So if you've got any questions, go there and I'll see what I can do for you. So they're there, but we're going to go live on the main channel, hopefully, and watch the budget as like a watch along. Haven't actually figured out completely how to do that yet, but that's the intention. We've got the stream set up, so hopefully that'll be the idea. And I plan on bringing some of the team in, so that should be a good laugh if you want to come along and watch with us. It'd be interesting to interact with people in the comments. So that's happening. So yeah, I'm pleased to be away from that, and also pleased as it seems to be everybody and their dog has got a cold or some sort of chest infection. I've certainly been struggling. So as I'm recording this, I'm absolutely knackered. I haven't slept very well. So I was keen to come on and just ramble about stuff I like to talk about. So we're going to talk today about business food. And the reason I picked this up recently again is because I'm seeing so many mistakes being made in people's books and their businesses about this, where they could potentially be causing themselves one of two things. Either we're not paying enough tax because actually we should have tax bills that we're not declaring, or we're risking penalties in an HMRC inspection, or the other sad one where we're just not getting the tax relief we should be because we're not capturing some of these things. And there's a weird side kind of angle with that says that actually in a limited company at least there's another one where we're just not being very efficient. So I'll talk about that. That's to do with entertainment. So what I'm going to talk about in this show is basically recap on if you're buying business food or meals, what are they? How does the tax work? How can we avoid making these mistakes? And where are the traps? And just give you some food for thought there and some tactics you can take away. So let's get on with it. Now, I think in business, buying food, like anything else, it kind of feels like, well, it's obviously a tax deduction, right? If I'm buying a business meal to have a business lunch doing whatever I'm doing, it should be tax deductible. But like many things in tax, there are tons of different rules and interactions. And I think I did a TikTok video on this recently, and somebody's comment was entirely true. They said, why is it so complicated? And I'm like, I don't know. All I can think of is over the years we've layered rules on rules on rules. Stuff's gone to the tax courts, they've ruled. So on top of the tax law, which is actually relatively straightforward, you then got layers of interpretation, and then there's different laws. So particularly in this show, if you're a limited company with employees, you end up having not just sort of standard tax deduction law. I'm trying to keep this as sort of easy to picture as you can. You've got different versions of the law. Just to the left of me, we've got 22,000 pages of it. So you've got like normal tax law, where it's down maybe a couple of lines that just says, any expenditure needs to be wholly and exclusively. And then on top of that, you've got employment law. And employment law, with a limited company is concerned, it has a weird interaction that you have to be aware of. And that's one of the tax traps we're going to talk about. Now, whether you're a limited company or a sole trader or a partnership, there's something in this show for you. But I think particularly some of the tax traps are going to apply to a lot of limited companies out there as well. So just bear this in mind, like solo limited companies, potentially, depending on what you're doing. Now, as I said, the reason that this is important to me is that we see a lot in someone's records. So we're going through, say, they're zero, and we look at it, and there's a category that just says business meals. You're like, well, what is this business meal? And it's just, Wagamama's, whatever. I love Wagamama's, but, whatever's in there. And it will just, that's it. It's in there. We have to decide as accountants whether it's okay. We don't know who was there, why it was done. And that's where one of the biggest tax traps is you've got to try and think about being a bit more granular about what this actually is. So I'm going to give you three main buckets, if you like. And they are, firstly, let's do the easiest one. The first one is entertainment. So when you're out buying food, you've got to think, why am I buying it? So if I'm out because, let's say, actually you want an accountant and I've met you in London and we're having food and I'm buying you lunch because I basically want to chat you up and get you to do business with you, that's absolute entertainment. You're a prospect, we're there for business, that's the purpose of being there. I can put that through my books, my limited company could pay for it, it's all fine. It's not tax deductible, so whether you're a sole trader, partner or a limited company, it's not going to be tax deductible. So there's an argument to say that as a sole trader or as a partnership, you don't actually need to keep a record of it because it has no impact on your tax at all. However, I think it's good just from a business point of view. You want to know where you're spending your business money, even if it's technically your money from a tax legality point of view. With a limited company, it really does make a difference. And I said to you that actually there is a small tax benefit there. And that's because if you imagine, if I just use my own money, I've already paid corporation tax and then I've likely paid some sort of income tax, whether that's on the dividends that I've taken or the salary I've taken to buy that meal. Now, if the company does that, that secondary tax, that income tax, isn't in play because I've not had it. And there's a sort of an exemption that says, yes, I'm there enjoying the meal as well, but because I'm there for business and everything else, it's okay for that to occur and me not, as the individual, as the employee, not get a tax bill. So when it comes to entertainment as a limited company, there is still a marginal, I think, tax benefit to logging that. So make sure you do. Don't just, and that's where I was saying about losing tax deductions is, if you're buying that all out your own pocket because you think it's not worth it because it's not taxable in the company, you're going to be losing some money there because it's actually eating into your personal drawings, your personal dividends, whatever they may be. So bear that in mind. But as I said, sole trader, partnership, maybe not as exciting. But that bucket's straightforward. The biggest thing there is to keep good records. And I know if you've listened to me for any amount of time, you'll know that I talk about this a lot, this keep good records being one of the primary ways to save tax. It's also one of the primary ways to avoid getting yourself in trouble with HMRC. Now, with this particular one, you want to keep details of things like who did you entertain, what did you discuss, those kind of details, because otherwise the tax office on inspection is going to have the same problem. And when I say tax office, I'm talking HMRC. They're going to have the same problem that we would have as accountants. Like, well, what did you do? Who was there? Why were you there? Why is this Wagamama's receipt in there? There are other places available. It just happens to be a good one that I frequent quite frequently. So you have that issue. So just make sure that you're keeping good records, but it's absolutely fine for your business to pay for it in those instances. It's just not going to be tax deductible. So that's pot one. Pot two is subsistence, or really you could think of this as travel expenses. So if in general terms, like everything we're talking about in this particular podcast and generally in tax, there are criteria, there are rules that you've got to meet, and I'm going to show you how you can fall foul of those in a minute. But in general, let's say I'm going to a temporary workplace. So I'm going to travel to up north. Now, where I am, south of England, anything north of the M25 is north to me, but let's just say I'm going up somewhere like Sheffield, Nottingham, that kind of way. And I'm going to go and visit a client there. Maybe I'm going to have to stay overnight, actually, because it's going to be a long day, going to finish late. My lunch, my dinner, my hotel, I don't think anybody's got a problem with that. That's completely fine, business travel and subsistence. The subsistence is just the word for the food part of it. So when you're doing that, that's fine. That's tax deductible. There's no tax consequence for me as the employee because it's allowable, there's exemptions in place, the rules interact really well. So that's fine, that's very straightforward, but you've just got to be careful about what you're doing. There are rules around that and it's worth digging into. So if you imagine if you just bought your lunch every day, that for most people, that's not going to be okay. There is some weird ones, particularly for sole traders, something in the tax world known as itinerant. So like a bricklayer going site to site. There's technically rules that allow deductions in certain cases in this. But again, I don't want to go too deep in this show, but I would go and check these things out if that's you, if you're like a bricklayer going site to site. But I always think the biggest rule to think of is there's two. There's the tax law one. And the tax law one is it wholly and exclusively for your business? And then add on all the different HMRC guidance and rules that go with that. But to me, there's what I call the BS rule. There's can you sit in front of a HMRC officer in an inspection with a straight face and explain why that is actually a tax deduction? If you put in for your lunch every day, it's unlikely that you're going to be able to explain that in a way that makes complete sense. Because if that was possible, everybody would be doing it, right? That's what you've got to think about as well. It's if everyone would be doing it. It's a bit like we talked about clothing repeatedly over the years. If it was possible for your business suit to be tax deductible, all employees would have business suits that would be tax deductible. So think about all those kind of things as well. But if we just take subsistence, that bucket, think about that. If you're traveling to a temporary workplace, you're doing some training somewhere miles away, those kind of things, generally that kind of food is going to be allowable. So you've got entertainment and subsistence, two buckets, one's tax deductible, one's not. Both in the right circumstances won't have a problem for the employee if you do it right. The employee is where it starts to get complicated because you can fall foul of doing things in the wrong order with how you reimburse. Things like if you just gave somebody £100 round sum to cover the expenses, I'm doing bunny ears that you can't see if you're listening to this, but cover their expenses. that round sum allowance in general is taxable, like wages, because you don't know what they spent it on and everything else, and it gets complicated. So there are rules, like there's loads of rules, but in general, if you're just reimbursing that travel, or let's just say you're a one-person consultant and you use the company card to buy that dinner while you're out at the hotel, it's not generally going to be a problem. So they're the two easier buckets for sure. You just got to keep good records. And then the third one is where it gets complicated, and that's what I'm going to call the staff or team food. And actually, this is the one we found is the most common problem with growing businesses, is it will say business meal for the team. You're like, okay, let's break that down, because we just said it's not going to be entertainment because you're taking the team out. It could be staff entertainment though. Now, staff entertainment, entertaining your team, is actually tax deductible. Now, there's almost no question about that. However, if you do that, if you don't fit into one of the many exemptions that exist for various types of various types of meal, then what's going to happen is you're going to end up with a tax bill on the individual, which is going to make nobody happy. You as the employer can actually agree to pay it. They call it a PSA, but you can basically, it's a load of hassle and admin, but you can go and say, I know I've done this and I don't want the employee, my team member, to pay the bill for it, so we as the company will pay it. Like, that can be done. And actually, I think that is done not infrequently, but people do it. However, most of the time you just try and arrange it with your knowledge to make sure that you don't fall foul of the rules where you need to do that. But sometimes it's impossible, as I'll give you some examples. So if you've got a team, and that team could include you as the director if you're a limited company, so you've got to bear this in mind for you as well, then yeah, food, meals, you can entertain yourself, there's no problem. But you've got a couple of these exemptions. And the key ones are something known as annual functions. You generally traditionally use this for like Christmas meal. So the company can go and pay for a Christmas meal, but you can only have up to £150 per head per tax year for each of those people. So if you had you plus another half and your employee plus the other half, there's obviously four of you, divide the bill down by four, what's taxable on the employees? If it's over £150 a head, it's fully taxable. It's not like you take £150 off and the rest is taxable. If you go over 150, it's all taxable. So, and that's why I said that's one of the ones where sometimes if you want to take the team out for some ridiculously expensive thing, you might end up in that. We're going to have to talk to the tax office about PSA because we don't want them to pay. But look, it's going to be 500 quid a head because the amount of money we're spending here, you know, those kind of things. We've had a good year. That's where that can go over. But generally, you've got this £150 annual function limit, and you can also split that over the year. So if you did a summer barbecue and a Christmas do, as long as those two combined don't go over the 150, you're generally okay. So that's the first one in that bucket. There's like a sub bucket of this. So you think, okay, so we know the bucket's fine. We just don't want the employee to be taxable. So is it an annual function? Can we use those limits? And you make sure you want to track those. In fact, if you're like what I tend to call like a micro business, it's you, one person, two person consultancy business. You could even have in your Xero or your other accountancy softwares are available. You can go in there, your QuickBooks or your Sage, whatever you've got. You can even make a separate line. More lines are better than, kind of consolidated lines. I think for us they're a nightmare. You want the detail, so you could actually have one for annual functions and put it there, so you can keep track of these limits. So that's it. Now that's one. Then we'd have a look at, is it a canteen expense? So if you've got a premises or you have like a home office, then there is an exemption. Again, there's criteria available to make sure that fits, but the company providing some food in the canteen as subsidised or free meals is actually got an exemption for the employee. So again, often can be tax deductible. Where it comes to home offices, I think you've got to be very careful about what you're putting through there. I don't think anybody's going to be arguing about milk and sugar, a bowl of fruit, that kind of stuff. But if you're putting your entire week's shopping through every week, then maybe you might have a bit more of a challenge. There's got to feel in the spirit, I think, with that. But there are rules, and if you're in the criteria, you're in the criteria. So could it be canteen expenses? And I'll show you an example where all of these things fail at once in a minute. But so if you're buying food in and consuming it on the canteen, and consuming it on the premises, there's a chance that you could end up using it as canteen expenses. And again, I could do an entire show probably talking about that one. But know that exemption does exist if it fits. And then on top of that, if none of those fit, you could use something we've probably talked about, I don't know how many times over the years, trivial benefits. And this rule exists so that I could say, for example, buy one of my team a Christmas present. As long as it's under £50, they don't get taxed. And actually, our business gets to get a tax deduction on it because it's effectively part and parcel of having a team. That works really well, but those rules are, again, there's about 4 or 5 criteria you need to make sure you tick off to make sure that actually we're all cool that isn't going to cause them a tax bill and it's all fine. And again, going back to the premise of this whole bucket of staff entertainment, is tax deductible. It's just you don't want to end up with a tax bill on the employee when you're trying to do something nice. So the challenge is then, let's pick a scenario, and this is a real scenario that happened relatively recently, or an inquiry at least from a client. And they wanted to know, look, they had an office, let's just say for ease, it was 20 people in the office. 5 of them were in a particular team that had done really well, smashed a target. And the owner said, I want to take those to a local curry house and we want to go and have a curry to celebrate that quarter's performance. Now, if we go through our little bucket, so we said, we know it's tax deductible for the company, sweet, it's staff entertainment. But are we okay, or do the people we're taking to this meal have a tax problem? And you look down the list and you say, is it entertainment? Well, no, because there's no customers present. Can it be subsistence? Well, no, we're just going to the local curry house around the corner. We're not traveling to a temporary workplace to do anything. I think somebody will try and argue quite frequently, well, the curry house is now my temporary workplace because we're going to have a discussion and whatever. Okay, I'll grant you, there's an argument there, but I don't think it's a strong one. But let's just say for general sake, no, it's not going to be subsistence. It doesn't look and feel like that. Could it be canteen? Well, no, because you're not consuming it on the premises for a start. So it's one of the criteria that would fail there. Could it be an annual function? No, because for annual functions, one of the criteria is it needs to kind of be available to all employees or employees at a certain location. It's not, because we're only taking a select few out of there. And then you're back to, could it be a trivial benefit then? It's probably going to be under 50 quid a head. So sounds good. No, it can't be, because you can't have a trivial benefit that's a reward for performance, because if it was, it's basically akin to a bonus, which means, and a bonus is just normally taxable under payroll like everything else. So it can't be a trivial benefit. So you end up in a place where it doesn't really fit any of those and therefore could easily be taxable on the employee. So there's a few things that could be done there. I think you could either potentially internally have a celebration and try and fit into the canteen rules. You could not do it for performance reasons, but again, you have said that in this example it was for performance reasons, then it potentially could fit into a trivial benefit. There's lots of stuff that could be done around that. But I think it's all about knowledge. It's knowing what you are actually going to do. And if you do this, are you comfy with the tax result? So I think avoiding the food mistakes, the most common food mistakes, I think comes down to sort of 4 areas. The first one is by categorizing it clearly in your records. As we said, keep good records. So in order to avoid the first mistake, you need to put it in the right bucket. So it's called a chart of accounts is the technical term for it. But in your software, or if you're using a spreadsheet still, then maybe make another couple of columns for it. Try and make those buckets: travel, entertainment, and then your staff entertainment if you've got it, and probably another one for trivial benefits and annual functions. I'd have them into separate categories. I like that definition. I think if you work with an accountant, they'll probably love you for doing that as well. But having that would be really important. Now, on top of that, we want number 2 then. So we want to be clear that if you're supplying food to the team, what is that result? For all the reasons, if you're going to go out and you're going to do something a bit quirky, do your research first, check with your accountant if you've got one, and just make sure that actually the way you're doing it's going to achieve the result you want. So, because sometimes the small tweaks of what you want to do, we could fit into an exemption and it would be okay. But if you just steam ahead and do it, then in this example, it could have caused a problem. And be sure then, number 3, to capture all of the entertainment spending. Because we said, if it is entertainment and it's in that bucket, it might not be tax deductible, but particularly if you're a limited company, we want the company to pay for it, because otherwise you're effectively paying 2 lots of tax in most circumstances before paying for it out of your pocket. If you're a sole trader or a partnership, as we said, it's more for interest purposes than anything else, but I do think it's a good one to do, particularly if you think later on you're going to turn yourself into a limited company or something. You might as well get into the habit of it. And when entertaining, point 4 in terms of traps, just make sure you keep a record of who was entertained, what was discussed, as we said broadly, just in case of an HMRC inquiry. You need the detail of what you actually did. Just a Wagamama's receipt is not going to be enough. I feel like I should be sponsored by them today. Actually, we've spoken about them enough. So careful pre-planned thought, particularly with the team. So as you can see, those 3 buckets, there's quite a lot going on in there. And we talked about it for about 17, 18 minutes. So there's quite a lot going on. Just make sure that you're in those places. But if you categorize it clearly and get it, I think you'll be fine if you just categorize it into those buckets, and at least everybody knows what it is and you can have a discussion about what it is. If you've not got team members involved, maybe there's some flexibility. If like you're a director, maybe if the company's paid for it and actually it was just you going out and it doesn't fit into any of the cases, it can go to what's known as your director's loan account or something like that. So it's not even in the business records, it's no problem. But if the company is paying for something for an employee, then we can be in a tax problem. So just bear that in mind as we go. So there we go. They're the main buckets. That's the main tax traps that I want you to be aware of. And I think that as long as you get it categorized in your software and you understand that these rules exist, you're going to be in a good place. So there we go. Hopefully you have enjoyed the show. If you have, make sure to subscribe via your favorite app, because we see the numbers of people that listen and the subscriber numbers, and they are different. So it'd be great if you want to continually get notified about when these shows go up. Obviously, you can go and subscribe to the YouTube channel, particularly if you like watching this. It does help our visibility. If you don't mind giving us a review, and thanks to everybody. I love seeing those reviews on there, so thanks for everybody wherever you listen. If you can just go 2 seconds and put a review on there, it does help, so thanks very much. For more business insight and tax tips, be sure to connect with me and my great team across all the social media channels, including of course the other YouTube channel, TikTok. We're doing a lot on there at the moment, Instagram, LinkedIn, always on there, Twitter, Facebook, and pretty much everywhere you can think of, not Snapchat. You can sign up to our 2-weekly HeelanHub Herald, which is an email direct to your inbox, comes out about every 2 weeks with more business insight and tax tips. So for example, we've just done one on this exact topic. So if you go to heelanassociates.co.uk, scroll around for a bit, you'll get a pop-up and you can put your email in there and we'll get you signed straight up and you'll get those emails. You can also, if you are we've talked about good record keeping, if you're still not in any sort of software, heelanassociates.co.uk/0 with an X, Xero. We've got a great discount going there at the moment. It fluctuates as to what it is, but it's particularly good at the moment. You can go there and get yourself a crazy good deal to get yourself onto Xero. They normally run with a trial as well, but you can go on there and get yourself what to me is the market leader of the software, and I think we'll be doing some more content on that for sure as we move into more chat about making tax digital. There's even more discussion about the different softwares, but for me, still the best one. If you want to get in touch about the podcast, you can obviously drop a comment in at the YouTube channel, or if you want to do it directly, you can email us at info@heelanassociates.co.uk. Well, that's it. Have a profitable and tax efficient week, and I'll see you on the next one.